Isn't it surprising that so many people still haven't gotten the memo? Days like this show just how fragile the crypto market really is. We're getting closer and closer to the realized price, to the average cost basis of the market. The average Bitcoin investor bought their BTC for $54,000. And Michael Saylor, who had been constantly buying Bitcoin, had its first week of net selling. 2.5 million worth of Bitcoin was sold to pay dividends. Pair this with news around ETF outflows, and the result is not pretty. Now, how much of this is actually noise? Can we potentially take this dip and buy it? Hi, my name is Gerhard. I've been in the crypto space for the last 8 years. I hit my first million 3 years ago, and in this video, I'm going to share the data points that I personally look at in order to outperform just buying and holding Bitcoin. I did that on average by 2% per month over the last 5 years. The data is on the website that's pinned down below. This is my track record. So this is my crypto portfolio measured in Bitcoin over time. And here is the monthly alpha versus buying and holding in a particular month. I don't outperform every single month, but what counts is the long term. And on average, my alpha is close to 2% per month. Now let's first look at the ETF numbers. This does not look great, as in the last weeks, it's all negative. But this is measured in US dollars. And that's a big flaw. If you measure the assets under management across the ETFs, this actually went up in the last 30 days. So all of that decline in charts like this is just a reflection of the price itself going down. This is no real net selling. When we actually zoom out and we have a look at the number of BTC that's held by the ETFs, that's making one all-time high after the next. In total, we've got roughly 20 million Bitcoin that are currently floating. 1.7 of those 20 million are currently in the ETFs. And so what about the headline that Michael Saylor is starting to sell Bitcoin now? How problematic is this? Here is the number of Bitcoin that's held by Strategy, formerly known as Microstrategy. This still tends to go up very long term over time. 32 Bitcoin of selling is close to nothing in the grand scheme of things. Michael Saylor owns more than 800,000 Bitcoin. The market sees a slight change in Michael Saylor's actions, which by the way he announced way beforehand, and it's panicking massively. I think this displays something very critical. The market is extremely nervous. Technology stocks went up quite a bit in the last weeks, and Bitcoin, or crypto in general, was supposed to go up with it, right? People always said that crypto is just like another technology stocks. It just goes up and down more with the Nasdaq 100. Now the Nasdaq 100 is shooting up. Bitcoin didn't, and so a bit of negative news already triggers a lot of panic selling. The average Bitcoin holder doesn't feel as safe anymore in their position as they used to just a few years ago. Now I promise that I'm going to share the data points that I use to time the market. What I believe is most important is to distinguish the noise from actual signal. And the ETF flows obviously are noise. Here is how the ETFs in aggregate change their supply measured in US dollars. And yes, in the last few days, this went down. But this is not the major driver of Bitcoin's price development. What matters much more is the long-term holders. Have a look at the ETF change in green and the long-term holder change in blue. Long-term holders tend to sell at the end of a rally. They tend to buy when we bottom out again. Then they sell again at the end of the rally. They buy again when we are comparatively low. They are timing the market relatively well. And currently, they are rather on the buy side. Are the ETF flows really noteworthy when the long-term holder flows are close to 10 times as large, and they are exactly in the other direction? Really, when you're trying to beat the market just reading the headlines in the news, you will have a hard time. It's much better to look at the actual data. Here's the truth that nobody in crypto wants to talk about. The activity on the Bitcoin blockchain has not grown for the last 8 years. This is the number of active addresses over time. It peaked at above 1 million at the beginning of 2018. But since then, it fluctuated between 600,000 and 1 million. It did not grow anymore after 2018. Now, why does this matter? It matters because it changed the dynamics around Bitcoin's price discovery. Because now the narrative that Bitcoin will be used as electronic cash is pretty much out the window. Now it's just another asset class. It's just another store of value. But as a competing asset class, shouldn't we expect it to also go up when in general risk on assets go up? At the bottom, we see the Nasdaq 100. At the top, we see Bitcoin. And the two assets tended to move in the same direction at the same time. They tend to go down at the same time. They tend to go up at the same time. But since October of last year, there has been a decoupling. Bitcoin went down while technology stocks went up. So what's going on over here? Where does this decoupling come from? It's not obvious, but everybody that's looking for superior returns right now tends to buy technology stocks and not crypto anymore. What we see here behind me, that's the stable coin market cap divided by the US money supply. During a bear market, this tends to go down. People are withdrawing from the crypto ecosystem. During a bull market, this tends to go up. Now, since October of last year, there were no more net inflows into the ecosystem. That's when Bitcoin decoupled from tech returns. And in a not so positive way, Bitcoin started to go down just from that point onwards. We need the system to expand in order for prices to expand. If no money flows into the system, then prices tend to rather decline. People are taking profit. Now, why do headlines like this panic everybody? Is the long-term story of Bitcoin really broken? This is Bitcoin relative to technology stocks over the long term. Yes, recently crypto didn't perform that well, but over the years it still tends to do better than your average technology stock. Or does it? Because there's different ways to look at this chart. This is just connecting the bottoms, but have a look at what happens once we connect the tops. Now, none of those two lines are scientific in any way. So we are just looking at a curved line that historically connected the price as well. Now we are connecting the tops with a curved line. And that curved line is going down. That's predicting future underperformance of Bitcoin relative to technology. Now, one of those two narratives has to win at some point. And at some point means very soon, actually, in the next 1 to 2 years. The lines, they cross. Are we going to break out to the upside? Is the floor going to hold? Or are we going to see another sell-off? And will crypto struggle for the very long term? I don't have a good answer to this. But the fact that we're even asking that question, that's probably one of the reasons why it's so easy to spook the market, even with small transactions like this. Now, if you've been watching this channel for a while, you know that I'm rather bearish, right? I've got this lightened up bear in the background. I've changed the avatar of this channel to a bear costume. I tend to be bearish. And that's because the pattern that we have seen during prior bear markets hasn't yet been completed. In the past, we always fell below the realized price, the average cost basis of the market, before we could recover. Bitcoin had to become extremely cheap for contrarians to pick up the pieces. Right now, it's not extremely cheap. The realized price is at $54,000, and historically, at the end of a bear market, we even tended to fall roughly 20% below that. So have a look at this, the realized price being at 20K, the actual price being at 16K. So that would bring the bear market bottom at 45K per Bitcoin, not at 60K, what we have seen so far. The market needs to be in net unrealized losses. The average Bitcoin investor needs to have red in their portfolio. There should be no incentive anymore to take any profit. And right now, the average investor is still 24% in profit. So whenever there's an opportunity to buy something that's seemingly better, the profit might quickly get realized. It's much easier to close a position that's currently in profit than one that's currently in losses. Whenever we are in losses, we tend to see less selling pressure and we tend to just wait it out long term. Now I'm going into much more detail in the premium updates of this channel. There are also plenty of tutorials where I share what indicators I use and why I use them and how I use them. And while most other channels are not willing to share that data, I have no problem at all to show my track record. So feel free to check it out. The premium membership is currently $125 per month, and there is a 1-week money back guarantee. So in case you don't like premium for whatever reason, just message me within the first 7 days and I'll refund you, no questions asked. The process is very simple. Just email me over here. You can try it out without any risk whatsoever. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time here on YouTube or see you on Premium. Link pops up here on the screen. Thanks for watching. See you next time. Cheers.